You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hello again. Welcome to Talking Real Money. I'm Don McDonald. That's Tom Cock. We are here to talk with you about your money and to try to allay some of your fears, to get you set in the right direction for a better future, to reduce anxiety. Because remember, what we're seeing right now, this whole coronavirus thing, is a health issue. It's a public health issue. It is not a financial crisis. You see, this is not like 2008 where we had a meltdown in securities markets. This is not the same kind of thing. This is a reaction to a health crisis, which the market does. It reacts to things because it doesn't know when an event is going to end. But typically with these kinds of crises, they, within relatively short order, unless it's a zombie apocalypse, and then all bets are off, it blows over and the markets recover if there's no underlying financial crisis.
And in fairness, no one knows the health impact of this. No one knows the economic impact, where people are not going out to restaurants, basically all sporting events are closed. A lot of money in all of that. Nobody knows what that's all going to mean, but what you're really saying is, as in all things, by the way, whether it is start with a financial problem, mortgages, real estate, whatever it is, or health or whatever shock to the system there is, that over time, things have a way of working themselves out, and over a relatively short period of time, stocks recover and end up going well above where they were prior to the crisis.
And if you find yourself out of work, this just in. The largest grocery store chain in America is hiring today. They need new employees to stock shelves. Kroger says they are hiring almost everywhere right now
there you go. There's
to stock those shelves. So there you go.
So if you're out of work at a restaurant, you can do that. Now, one of the things we do talk a lot about. Did you give the number? You gave the number?
I didn't, but
okay.
I should.
Please do.
That number is 855-935-TALK. You can call us and ask your questions about your money, your situation, your fears, your concerns, your future. 855-935-TALK. You can also call that number anytime, and we'll answer your questions on our podcast.
And one of the things we do talk about, and we have for, a long, long time, is the importance of being diversified. And yet, remember, I get to look at about 10 new portfolios every week. And out of those, about 3 or 4 own individual stocks. Now, why would you own individual stocks? The only real reason to own them is you expect that they will make more than the index, right? Make more than the market. Here's the other side to that. They can lose more, a lot more. In fact, they can go to zero. You know this, right? Because there was a bank called Washington Mutual. There was an energy firm called Enron. Oh, those are unusual. Yeah, kind of, except if you really go back further in history, almost every company does something if they become a great company and then they go away because ideas come along. Someday Amazon will be gone. I hope Jeff Bezos isn't going to go down and turn the transmitter off when I said that, but someday it will be.
Someday it will, though. Something will usurp their position.
This is the nature of things, but let me give you, because this is, I think, we all know the great manufacturing firm in Seattle called Boeing, right? What could ever go wrong at Boeing? Nothing. Oh, that's right. The plane they were making like 1.5 of every day. They can't get off the ground now due to problems with the computers in them. Oh, and then there was this other...
And the fuel tanks.
Well, et cetera, and then this other problem that
keep rising.
People basically are not flying right now, right, because they don't want to go anywhere. So Boeing, the stock, $333 to start the year, closed yesterday at $165. Now, that's a substantial increase in downward than
about half.
Yeah, and that's way more than the index have done. How about you wanted to be fancy, you wanted to be in the cutting edge, as I know some of you do? Because I I know I shouldn't complain, but we went to a conference put on by the American Association of Individual Investors, and what was one of the breakout sessions on? Pot stocks. Because that's the hot new thing, man. Mm-hmm. Your money will never go up in smoke in that one.
Man, no way.
That's cool.
No way you're smoking the profits.
Exactly.
Oh, wait, maybe we are.
Tilray is a Canadian firm that is traded in the United States that hit 300 not long after it became publicly traded. You know what it was trading at yesterday? $4.30. Does that sound like a rather substantial loss?
Price right now.
Yeah,
and its all-time high was 155. No, 214.
Well, actually, intraday it went up to 300. So anyway, at one moment,
closing was 214.
Yeah. But okay, let's just say 214 to $4. I'm not smart enough to do the percentage that quickly right off the top of my head.
It's a lot.
That's a fairly substantial loss. Or the company that you've loved for, 30 years here in Seattle called Microsoft. They peaked out at almost 190 and was trading at 138 yesterday, so down by a third. So individual stocks, you should not own individual stocks for that reason, if none other. You think you're going to make more because of what we chatted with a guy last week. He said he only invests in Microsoft because it's a cash cow. What does that mean? I don't. No, do not own them. Diversify.
Cash cows have run out of cash and gone bankrupt. Companies that people said couldn't go bankrupt, like General Motors, went bankrupt. Could Boeing? Yeah, they could. I'm not saying they will, but they could.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no-obligation risk quiz at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Oh, that would be mean. That would be really mean.
I know, wouldn't it be mean?
Yeah.
But I'm going to tell everybody anyway. By the way, our number is 855-935-TALK. I found out where Matt Colvin lives.
Matt is the guy we mentioned last hour that is hoarding the hand sanitizer to resell at Amazon with a slight uptick in price.
If you happen to live in the small town of Dayton, Tennessee, which is just northeast of Chattanooga.
You're the closest guy I know. I'm sending you over there.
So head on over to Matt Colvin's house and just tell him you want some free hand sanitizer. Tell him Don sent you.
Oh, boy.
Yeah. Give him my number. Tell him to call me.
Yeah. Please don't.
He's 36 years old.
Yeah, let's not do that.
No.
It's funny.
I didn't give his address.
Okay, but you could
just
probably
said he's in
find
Dayton,
him.
Tennessee. Find him. There you go.
Wouldn't be hard. Yeah.
I didn't say hurt him. I just said ask for some hand sanitizer. 855-935-TALK. That is our phone number, and it is a free call, and we do want to talk with you and help you through this health crisis that is affecting your money. Jim, you're up. Welcome to Talking Real Money.
Hello, Jim.
Hi there.
Hey.
My question today is about the backdoor Roth IRA, but I will take one bit of contention with your concept of not buying individual stocks. I think a reasonable person that takes the time to do the investigation, do your homework, there's a time and a place to own individual stocks. Just my 2 cents. We've done okay that way when balancing against ETFs and other large funds. But we're in a situation now blessed to have made a little bit more money and maxing out our income on what we can contribute to our Roth. And I've just learned about this backdoor Roth process. Can you tell me more about how that works and what are the benefits?
So the backdoor, what you're referring to is putting money into an individual retirement account and then immediately transferring it to a Roth. And remember, if you have other money in other IRAs, you have to do it based on the amount of money that you're moving into the IRA and to the Roth. It's a formula there. Do you have other money in individual retirement accounts?
Yes, I have a Roth IRA. It's a Roth that I've got money in.
Okay, you have a Roth, but not.
Yes.
Okay, but
and
not.
I've got a brokerage account within my Roth.
Okay, well, that's just where the money's held. The reason you need to know, because I'm getting a little mixed message. A Roth IRA is money that's invested after taxes have been paid for it. An IRA is generally a deductible item. Money goes into the IRA, and then you transfer it to the Roth. The only way you can do this generally that makes sense is if you have no money in IRAs, because if you do, you have to move an equivalent amount from the IRA you already have to the Roth and pay tax on it. That's why I was asking you if you already had individual retirement accounts.
Sorry, I do not have traditional.
Okay.
I have Roth IRA.
Perfect.
Okay.
So then in this case, then you would go set up an IRA for yourself. And are you married?
I am.
Okay, so you'd set up an IRA for each one of you. You would simply make the contribution to the IRA, and then the next day move that money over to the Roth IRA, and now you've got post-tax money, which will grow tax deferred. Or pardon me, no, tax-free. I said that wrong. Tax-free.
So there is a tax component I'd have to deal with right now at the conversion, though, correct?
I missed part of that.
Go ahead. I didn't hear what you said.
Because we got a little...
Am I having to pay taxes then on this conversion right now?
Yes. Yes.
Okay.
Yes, that's the only way you can get tax-free growth going forward is to pay taxes when you recharacterize from a regular to a Roth IRA. Yes.
Okay. So it basically skirts the laws of contribution for a typical Roth IRA in maxing out. Okay, I get it.
Yeah, it's just like taking income, right? So therefore, yes, you need to do that. But it's a good way for people that are not Roth eligible, because the income for a married couple, if you have income above about $185,000, you cannot contribute money to a Roth IRA. But this allows you to do that. Allows you to sort of get around that rule, if you will, right? I'm just looking up the amount here.
It's just a backdoor.
Just looking up the contribution.
The contribution amount?
Well, no, the amount of income that is.
The income limit now. I don't know what that is.
Rules you out. Yeah, they change this all the time. Less than 196,000.
Is that married?
So if you make more than 196, you are not Roth eligible. If you make less than that, Jim, then you could go ahead and just put money right into Roth. You wouldn't have to do the back door.
Sure. If you make just slightly more, is it a percentage that you can contribute, or am I completely X'd out of my Roth contribution?
It appears I'm reading the table right now that it's 196 to 206.
Yes, that's where
there's a scaling down of all this based on where you are in that area. So yes, you could still do it, but you'd have to look at the tax ramifications of that.
Perfect. All right, thanks, guys.
Thanks, Jim. Appreciate your call.
Thanks, appreciate the call.
Again, I want to be careful because I wasn't going to argue with him because I'm not very good at arguing with people, as you know.
I'm better at it.
You're way better, but just think through rationally about the individual stock thing.
Let's just use academic research.
Well, that's what I'm saying. If it's true that you want to buy individual stocks, you're buying them. The only reason you do that is because you want to do better than the market, right? The market,
yeah. Right.
So remember that now it's like 95% of the people that own stocks are institutions, right? Mm-hmm. They're hedge funds, they're mutual funds, whatever. And they are spending millions of dollars researching those companies. When you buy something from them, they're selling it to you because they don't want to own it anymore. They're spending a lot more time and effort on that than you are. They have to, because it's what they do every day. Now, it doesn't mean you might not get lucky and buy Microsoft in 1987 and sell it in 1999. You might.
But recognize that it's luck.
It's luck. But so to think that you're going to somehow beat these people that spent, and they have all the advantages, by the way, over you as an individual. So not to pick on Jim, because... Sounds like a nice fellow.
I'm just picking on everybody who claims to be a stock picker.
Yeah.
Because there was an Arizona State University study that was done a few years ago by Hendrik Bessembinder. Dr. Bessembinder.
Yes.
And that study said that buying stocks, your odds of success are slightly better than the odds of winning the lottery.
Buying stocks that beat the market.
That beat the market.
Right. Okay.
Right.
Yeah.
And that's just
It's small. And the number, by the way, of stocks that sort of do better, I think that it was T-bills or Treasury. It was a very small.
T-bills, that's what, yes.
The risk-free investment, if you will, riskless investment, is a very small number. So you got to pick those, too.
And an interesting fact that came from his study was that every single bit of wealth creation of the U.S. stock market since 1926, every single cent of it was from 4% of the stocks.
There you
the
go.
best performing 4%. So not only did you have to pick better stocks, but you had to find the 4%. 855-935-TALK.
And Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-8255. That's our phone number. Give us a call. We'll talk about life and money and making more of it and dealing with it better and not panicking and building a better retirement and also just making sense of this whole thing. And by the way, the inverse of that 4% number is that 96% of all the stocks traded since 1926 of the best, the worst performing 96% did not outperform Treasury bills.
T-bills.
Treasury bills.
The riskless investment, right?
It's ridiculous. And by the way, on the IRAs, if you're making non-deductible contributions and turning those into a Roth, those are not taxed.
Yeah, you're simply, because you already paid the tax on the money going into the IRA.
Right. Deductibles
then you're just moving it to the Roth.
Then you pay.
Yeah, by the way, I don't know how much longer they're going to let that one slide. The government, I mean.
After the government's now paying companies back for sick leave, I guess they're going to have to do something to patch that hole soon.
Yeah, that's interesting.
I don't understand what they're doing. I really don't.
And then they're saying no payroll tax or something for a period of time?
Well,
which I'd
that
favor
didn't get through Congress.
Sure.
Yeah, exactly. I don't think that got through Congress, did it?
I don't know. But, no, what other measure? I mean, here's the thing. If you work for a restaurant and you're laid off now for 60 days or something,
ooh,
I mean, that's going to be tough.
You're not going to make up the tips.
Right. I mean, this is going to be very, very difficult for many. There are so many restaurants already closing in the greater Seattle area. Tom Douglas, the restaurateur of Seattle, has shut down all but one of his places, and others. Many others.
Well,
now there is by the way, there is a solution to this.
Eat out more?
No, have it delivered. As a matter of fact, there's a chain of restaurants in it's not near us, but it's in the southeast called Tupelo Honey, and it's a chicken place.
Mm-hmm.
They cut a deal with DoorDash where for 99 cents. DoorDash will deliver from those restaurants because they want to keep the kitchen open. They want to keep busy.
How about Pal's Sudden Service?
Pal's is going to do really well because Pal's is 100% drive-through.
Yeah, I'm not allowed to make jokes about them anymore, so I'm just going to put it out there.
Our new Pal's
how soon?
has not opened yet.
Okay, you're still waiting.
It's painted turquoise blue.
Has the big hot dog on the top or whatever
the
it is?
The hot dog has not gone in. I want to go over for the big hot dog lifting.
There are other, by the way, Canlis, world famous Canlis right down the street here in Seattle. They are closing.
Isn't it pronounced candles?
No, Canlis, but they're closing, and they are they're gonna have drive-through for hamburgers.
See, I think drive-through and delivery is the way to go.
I agree.
Because I'll order my food, leave it on the doorstep.
Sure.
I'll go out and pick it up. It's good.
How about
golden?
Here's another one you could try. By the way, I'm going to do this tonight. You cook something at home. It's crazy, I know. You get the ingredients, and then you kind of figure out how everything works. You cook it, and then you serve it to the people there. It's crazy.
I have a freezer full of that.
Do you know? I mean, this is actually an interesting point economically. I mean, if you think back 50 years ago, the percentage of the amount of food that people go out to eat compared to what they did 50 years ago, it is astounding. Very few of us went out to eat as much as we do today. Not even close.
Well, but they're an important part of the economy now.
Well, no, I'm not saying not to do it. Yeah,
we have to go eat out to keep these people working.
I know we're being silly, but that is true.
Yeah, but you know what? Speaking of candles,
I'm not eating the candles if we get.
You ready for this one?
Yeah.
People I went to a Walmart today,
I saw you. I can verify that.
I was at Walmart.
Yeah.
The water was sold out, too.
Yeah, they had a bunch of it stacked up in front of the grocery store I was at today.
Now,
I don't
here's my
understand
question.
it.
Okay, I can get the toilet paper, maybe.
Hand
but I don't
sanitizer
get
for sure.
water. Oh, hand sanitizer,
Yeah,
absolutely.
right.
Yeah. I don't get the water. Did you think your tap's going to be shut off soon?
It doesn't matter to me because I'll go out in the swamp and get the water and boil it, and I'll be okay.
If that's the case, then you should stock up on candles.
Canned food, ammo, and handguns.
Candles.
Canned food, ammo, and guns.
You know, I
set.
said it. I said it humorously in some of our seminars that you don't have to worry about the market coming to an end unless it's a zombie apocalypse. Do people really think that's what's happening? 855-935-TALK's our number.
Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
You know, even though the shelves were devoid of toilet paper when I went to Walmart, they were stocked full of Corona beer.
Yeah,
Corona's
which is
in stock.
Yeah, it's been going down in popularity for about a month now. But I've decided since you keep mentioning the toilet paper thing, every house I visit now, friends, relatives, I'm going to start
Taking
checking.
a roll home.
I'm going to start checking to see how much they have, and if they are a hoarder, then I'm going to
I'm going to take a roll home.
chastise them properly. Or I can take a roll home.
Properly chastised. 855-935-TALK is our phone number. We still have about 25 minutes or so to try and help you get through this or whatever it is you're facing in your financial life, and we work with you on almost anything. We'll try to help you as best we can with whatever it might be. And Phyllis is next. Welcome to Talking Real Money.
Hello, Phyllis.
Great. Well, I have great news.
Good.
Because I've, what am I trying to say?
You're telling us good news.
I thought about when do we have viruses going around in our country? It's we get our shots in the fall because in the winter months, cold, damp winter months, that's very good for the virus. But in the summertime, it disappears. And I just did some research on all the very hot, dry countries that are hovering around the equator. And they have maybe one or two cases that were flown in by the airplane.
Well, that is good news. We certainly are happy to hear that.
So we are all moving to hot, dry countries.
Which I'd prefer to
now,
move to
Seattle
anyway.
doesn't really have to worry much about having hot or dry.
Not until
ever.
climate change is completely done here in the next
it'll be a very
30 or
long
40
time.
minutes. Yeah. So
I
can we go to another call?
Oh, sure.
All right.
Okay.
Turn to the planet
good
now
news.
and go to Cesar. Do I have that right? Cesar, do I have that right?
Yep, that's right. How are you today?
That we're doing great. Thank you for calling us.
Yeah, no problem. So I have a question with regards to estate planning.
Yes.
So my father-in-law recently passed away, and so my wife and I are thinking about our own estate planning as we move forward here. And so we have 3 boys. And so I'm just trying to figure out what's the best way for us to try to, I would say, eliminate the death tax, but just try to get as much money to our kids as possible in the future. And so I know there are a number of different vehicles we can use, right? Try to avoid, I guess, probate. One could be the Roth IRA. One could be the hybrid life insurance. I'm trying to figure out exactly what are some other vehicles that we can try to use and or invest into in the near future for our kids.
Let me ask you a question first, Cesar. How much money are you expecting to have in your estate first? That's kind of important.
Yeah. So right now we have about 1.3 million right now, and my wife and I are about 40. So we're projecting probably about 4 or 5 million.
Okay. Well,
Okay,
so the great state of Washington.
Well,
the great state of Washington, you get 2 million times 2, so there's 4 million right there without any state tax here.
And then
federally, it's much higher. I forget what the number is. It changes. But
I don't think you really. One thing you do, you mentioned it, you alluded to it,
Yeah.
and that is the probate process, which with an estate of substance that is complicated, probate can be a nightmare for your heirs.
So that might be a reason to get a trust of some kind.
Right, exactly.
And you also mentioned the Roth aspect. So if you might leave money in a traditional IRA or traditional 401k, right, where the money's gone in pre-tax and then grown, and then you or your wife don't spend it, don't have to take it out and pay tax on it, and you leave that to somebody else. Now, under the new Secure Act, your children will be required to take that out within 10 years and pay the tax. You could, as you alluded to, move that money to Roth over time, so then all of your money's post-tax. So when that comes out and gives it to your children, they get it tax-free.
You do not. I do not see, Cesar, that you're in a situation where you need to worry about estate taxes. The federal exemption for 2020 is $11.5 million.
And the state of Washington, you get
Washington
the $2 million.
is $2.1 million.
For each one of them.
For each one of them.
Yeah.
So you're in really good shape. What you need to do is some planning in terms of the inheritance, the ease of inheritance. Do a lot of payable on deaths or transfer on deaths on your accounts. And you probably have enough in assets that you need to consider getting with a good elder law attorney and setting up a good trust. Thanks for your call. 855-935-TALK is the phone number. Give us a call.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
You feeling a little down from the coronavirus? You feeling a little bit depressed because of your money this week? Well, call Don and complain to him. He's always the one telling you got to own stocks. You should be in
my
stocks.
fault.
So give him a ring, tell him why he's wrong, and
But
he'll
he's right.
appreciate it. Oh, sorry, 855. I forget the 935
talk.
Yeah, talk. I should know that number. So yeah, ring him up. Ring him up.
No, I'm sorry, but I'm right.
Okay.
I've been right the whole time.
By the way,
every time something like this happens, I keep saying the same darn thing, and I've been right every time.
We watched a class yesterday online, which I thought was great, put on by Dimensional Fund Advisors. They're gonna do it for our clients next week, and then on Friday you're doing one for anyone who wants the help. But
for the public, right?
This is one of the things that I truly believe, and I've said this before yesterday. This is something I've used for a long time.
You said this in the past?
I've said this in the past.
You're not just a Johnny-come-lately?
You know I have. Just think this through. If you own a home, and you woke up in the morning and they said, the pre-market value of your home is $680,000. And then at 6:30 they said, the value of your home is $640,000. And then by 9 it was down to $580,000. And then by 11 it was $610,000. And then by 1 o'clock in the afternoon it was down to $500,000. What would you do?
You'd panic.
Right. I mean, you'd be freaked out
every single
They don't
day.
do that with your... Why do you have to watch it with stocks? Imagine if you watched it every moment with your house and that was... Put it in the drawer, look at it twice a year, and get over it.
It's even worse than that, though, because we have gotten it in our heads, thanks to CNBC and Bloomberg, and I blame you guys particularly.
What about Market Watch?
It's not a TV channel.
That's true. Okay, good point.
You know, these are TV channels where they constantly throw information in your face. It's like, and you feel like you need to be watching it all the time because something exciting could happen or something scary. Well, you're just making yourself crazy because you have to get this. This is an important fact about markets. Stock markets, one, give you high returns. Have given you high returns because you've taken high risk. Risk and return go together. Markets are very efficient. They really are. They price all the information in because you've got billions of transactions going on every day.
60 billion a day. By the way, that's another thing. When they tell you here's why people are selling stocks, they don't really know why because you'd have to interview all those people.
I will tell you why they're selling stocks.
Okay.
And this is an answer I've never heard from anybody but Dimensional.
Yeah?
People are selling stocks right now because there is the demand, because of the uncertainty about the near-term future. Investors are demanding a higher return to be uncertain, to have that higher degree of uncertainty. So here's what happens with that. If you're investing today, you're investing in an environment where investors are expecting a higher return for the risk they're taking and are very likely to get it because they have in the past.
Yeah, you have to bear that uncertainty. By the way, the other thing, investing in stocks, you have to be somewhat of an optimist.
Well, an economic optimist.
Yeah, you do.
You don't have to be optimistic about anything else.
Well, no, but you got to believe that companies are going to succeed, that economies are going to grow, right? Because it's based. Really, I mean, don't you think?
Is that optimism or is that realism?
Well, it's been real for a long time, but many people. This is an unprecedented healthcare crisis, Don.
Yeah. Let me just throw this little fact in. The global economy we know for a fact, we have numbers to bear this out.
Don was there for the last, 3,500 years or whatever it is?
Well, the last 2,000 years.
Yeah, okay, pardon me, 2,000.
We have numbers to show that the global economy has steadily grown over the past 2,000 years. Now,
and there have been some crises along the way.
Oh, you think?
Yeah, Dark Ages there. You got
Dark Ages, Crusades, Europe overrun by the Moors.
That's even before the 20th century when things really got ugly, killing millions of people. World War I, World War II, the Depression.
The worst of all time, the worst human event of all time was in the lifetime of some people who are still breathing.
Yeah, you're talking World War II.
That was World War II.
Yeah, the most deaths.
It was the worst thing. I mean, entire countries practically wiped out. Right. Cities burned to the ground.
Yeah.
So if we can get through that, we can pretty much get through anything.
That sounds optimistic to me, so I'm going to go with the optimism.
That's realistic.
All right.
Oh, again, I was going back to my theory. My theory is that the global economy has grown ever since we first got out of the trees and wandered around the savannah.
Yeah.
The growth at first was a little slow.
But it's different this time, Don.
Oh, it's always different this time.
That's my favorite one. It's different this time. Wasn't it different this time in like 1999 when, remember about technology stocks? The internet stocks, they no money, they barely got a business plan. It's different. It's not.
SARS was going to kill all of us in the 90s. It didn't.
Yeah, right.
It didn't.
What about Zika?
This will kill Zika.
Yeah.
Oh, I was in Florida where we were Zika freaking.
Yeah.
It was the Zika freak.
Super Zeke.
But what I'm saying is I don't know when this thing will end, and you do need to take care of your health. And by the way, let me throw this little thing in. I wish this would get mentioned more often. All of you really healthy people.
Thank you.
I'm pointing at you. Remember that if you could get this and you could feel fine.
Right.
But one of the reasons why we're social distancing is so you don't kill Grandpa.
Yeah, no, and I think we should follow the experts and do that.
Grandpa.
No, and that exists in my household, right? Because we've got.
I do,
and I think it makes sense. I think we should be careful, follow the experts, do what they tell you. I think we're doing that.
You guys aren't visiting Grandma,
not right now. No,
because she's sick.
Yeah, right. So we're not going to traipse anything in there. I think that makes sense.
My mom called me the other day because her husband died.
Yeah, in December
last year, and she goes, I understand this, but I'm really lonely.
Yeah, right. I'm sure she is, because
it's like, nope, she's 83 years old, 84. Nobody's going to go visit her.
I know. Yeah.
Nor should we.
I agree.
I said, I'd love to visit you, but I'm not potentially dragging a virus into your house and killing you off before your time. No,
so this doesn't help you if you're in a portfolio that has lost 20% of the value and you think it's going to continue, except that, again, going back...
You shouldn't have a portfolio that could go down 20%. It means you're 100% in stocks.
Well, the 60-40 is down 16 year to date, but...
That's not 20.
That's not 20. Yes, it should be built for your need for growth and your ability to take risk and how soon you need the money. That is true. And the other aspect that you pointed out that people, they should, if they've taken the risk quiz before, go take it again. See what your score is today compared to where it was 2 months ago.
By the way, there's no limit to the number of times you can take the free risk quiz. You can take it as often as you want.
And they should come, and they don't have to come. They can go online and take in your class next. I'm used to saying come see us.
Hey, don't. We want to make sure you catch The class.
Yeah, please. Yeah, let's make sure the way we say that. Yeah. Don will be doing it.
Catch a class.
Retirement Investing in Turbulent Times, Friday, the 20th of March at noon Pacific, live on the interweb. Get it right there.
Right.
That's
and
the internet.
Literally
That's a bad joke,
because of the cheap tier we bought, we only have 100 seats available.
So we will sell that out like everything else we do around here, doggone it.
You are Mr. Sellout.
I'm Mr. Optimist. Come on.
I'm just a realist and a cynic. I'm a cynic, I admit it. All right, remember you can call us 24/7 at 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey, don't forget to sign up for or miss this class I am still putting together. And it is an online class, so you will not be exposed to anything except great information. And it really is good information. It's called Retirement Investing in Turbulent Times, and you can sign up for it. It's absolutely free, only 100 seats, though. So go to TalkingRealMoney.com and click on the guy pointing to the chalkboard or just events, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?